All right, good morning, everybody. We got a lot of Fed speakers today, which is surprising because they have nothing new to say. They're all just, you know, singing from the same hymn book, trying to reiterate the message that Powell has been saying for 5 months now. But after the Moody situation, that's the third downgrade. Surely they got to come out and say something, but they're still going to focus on the same old game, don't rock the boat. So talk without really saying anything, reassure the masses, make no promises. More headlines on Europe likely doing better than the US as the year progresses, and threats on the third quarter of this year when we get into that earnings season. That seems to be the focus, right? That there's a delay between tariffs and the impact of tariffs. NASDAQ down the most, barely down at all, but down 0.25%. The Dow just slightly above zero. And the UK at 0.5%. Really got nothing this morning. It is a full list. And we're going to see import-export numbers from Japan in the overnight. That's not going to do much for us. And we have the G7 meeting in the overnight as well. Really not going to do anything for us today. Don't expect either one of those to be a hurry up and wait situation either. Yeah, it should be a good stock pickers day, right? Quantum's up early. Um, Reddit still from yesterday, kind of shaking that off a little bit out of China with Billy. Some EV and Mag 7 declines, but so, pick and choose, right? We have the opportunity for the president to move things around a little bit as well. Just remember when I'm on Finance Juice, these numbers that you see are my local time. So either find them on your Finance Juice or somewhere else. My local time is an hour behind market time. So if it says the president will be speaking at 11, they mean 12. And when it has a White House press briefing at 12, they mean 1 o'clock. Yeah. It's interesting that the president is backing away from the Ukraine-Russia situation. We'll see what comes of that. But I know all I can imagine out of that is, raising your hands and saying, it wasn't me, I didn't break it. I didn't break it, it wasn't me, I didn't break it. So if all hell breaks loose over there, it wasn't my fault, I didn't break it. We weren't a part of it. We walked away. Maybe I'm just paranoid. Don't they say that every year? 58,000 in the overnight. So we're maintaining our normal range again. And in the overnight volumes. It's a little disconcerting after, that exuberant volume that we were getting for a while to be back in the 50s again. But there is some comfort in familiarity. So, we're back into our comfort zone. Surprised to see the put wall still with us. Had this funny feeling it was going to get rolled down, but yet here it is. That is going to be a tell for a move lower, in my opinion, at this point. Keep my eye on it. Think about it from the daily chart perspective and the idea that we still need our higher low, right? We don't have this higher low yet. So we need one. We have the put wall at this point right around that 5,900 level, right? You see 59, 58.94, whatever, 5,900. So how are we going to put that put wall in or how are we going to put that higher low in if we got that put wall right there? They need to roll that down somewhere into like 58, maybe 57 and a half. That gives us room, right? Not a target for us to hit, just getting it out of the way so that we can pull back and set that higher low. Otherwise, if they don't move it, we're just going to, come down into 5,900 and really not be able to get underneath this 200 period moving average. That's where we're going to get hung up. So we need the put wall out of the way. If we see that put wall rolled down, that's a bit of a heads up that we're headed in that direction. I was shopping around yesterday trying to find some opportunity, just some lower cost options trades, short duration, 7 to 10 days. And there wasn't anything really anything of note. Everything is just so out of whack cost wise. So I think instead of doing the indexes, I'm likely going to do one of the sectors, but we are due for this pullback, right? We are looking for this higher low. And it's not a matter of if we're going to get one. We're going to get one. The question is, how much of a pullback is it going to be? Will it be one of these more, gentle pullbacks like we had here, or a deeper pullback like we had here? That's the only question at this point, is how deep is the pullback going to be? So it wouldn't hurt to shop around for a butterfly on 57. You could probably get that for pennies, right? Or at least if you are looking at the SPX, that would be 56.50. Right? It'd be a really cheap butterfly out there, very likely for pennies. You could probably get one in the 57.50 area instead of 56.50, 57.50. Maybe 5 or 10 cents. In the SPX, you can't get anything less than a 5-cent trade because it's a nickel increment options cost. But might be worth pricing something. And of course, the butterfly is the cheapest you're going to get when it comes to any of those spreads. I mean, you could do a vertical, I suppose, but there's just nothing to it. I wouldn't want a vertical. So keep your eye on that put wall. Seeing it roll down will be a bit of a heads up that they're getting it out of the way. Same thing with the call wall over our head. We are focused on this range that we're in now, right? And we've pretty much been maintaining the range since Friday. It's fine. We're just really getting started. When we leave this range, GTFO, got to get out of the box. We got the put wall down below, and then we've got that 6,000 above. So we're just chopping in this range. Either they move the put wall down so that we can fall down and set that higher low, or they get the call wall out of our way so that we can pop out and make a move to the upside and continue to advance. I know that's not the base case scenario right now, but we did it earlier this year when we ran up and then we paused and we had a little doji day, and then we ran up more and paused, had another doji day, and then we ran up even more before we finally pulled back. So, run up, and now we're looking at a doji day. While we're waiting for a pullback, it doesn't necessarily have to pull back now. It can pull back later. But like I said, we're going to pull back eventually. So let the options walls show you the insight on what the market is leaning towards, a breakdown or a breakout. Breakout would be a call wall getting rolled up, and a breakdown would be a put wall getting rolled down. And if they roll that call wall down, then they're like pressing the market to the downside. Spot Gamma released the AM edition, so you guys will get a chance to read it before me. But I'll get it shared into the chat. You can at least get started on it. They wrote up a little bit on UNH in the after hours report from last night. There was a lot of people asking about UNH, after that magnificent fall that it had. And sure, there's always an opportunity to, trade a bounce on something like that, but I just really wasn't interested. It was play with fire, tend to get burned sort of a scenario. But if you did play that bounce, then, kudos for you as a pretty good bounce back in the other direction. Looking at the ADR this morning, we really don't have any edge yet towards one side or the other, which makes sense because we're basically flat this morning. We haven't gone anywhere. So if we were to hit the upper ADR, we would need to break out of that range that we were talking about. So Friday, Monday, that zone that we've got here, we got to get out of that if we're going to hit this upper ADR. Not to say that we can't do that, just we're much more likely to hit the lower one since we don't have to break out of yesterday's high to do it. So far, we are lined up for a sideways day. We have no real fuel to kick anything off. So it would make sense that we stay inside the red line, stay inside the box. This is an average daily range right there, which continues to shrink. The other day we were looking at it, it was at $100. Now it's at $95. As long as the volatility continues to fade, this range will continue to compress. Back before COVID, the average daily range was 35 points. Imagine that, huh? Yeah, those days are gone. So we've got a big options level down here, 59.50. And then we've got 59.32 cog line for the lower ADR half, which acts a bit like a magnet too. If we can break that ADR half, then we've got the RTH open, the Globex low of yesterday, and then the full ADR. We really don't have a reason to hit that full ADR, but level by level, right? So if we break 50, then we aim for 32, then the RTH open, then 92 cog line, and then the full ADR. Level by level on down. Today's channel is obviously a lot wider than yesterday. Wide channels imply that we shouldn't break out, or that if we do break out, it doesn't stick and we come back in again. These channels won't make price do anything. We didn't have an MDP yesterday since we ran through it So far, we have an MDP this morning. That's a missed daily pivot, but the expectation is that we're going to hit that daily pivot sometime this morning, right? Sometime today, we'll hit it. That's what we would do 80% of the time, is hit that pivot. When we think about how far away from the daily floor pivot we got yesterday, we made it to the S2. Thought I would point that out, right? S2 with an R1 target back in the other direction. R1 target in the other direction. So this morning, we're nowhere near either one of those. Base case scenario on a sideways day with no reason to move is that we stay between the R1 and the S1, which is not a lot different than the ADR half. So it's kind of the same numbers, just depends on what tool you're using. The profile so far this week really isn't offering us much. It's got too much down here to be a classic P shape. We're building out the distribution center relatively well at this point. We're still holding in that zone too, so it's likely to expand significantly. That value area between the value area low and the value area high, it's around 50 points ish, 40 points. That's the zone. And if we break that zone, we're likely going to retest last week's point of control, 59.11 cog line. I would expect an accelerated move. So that should be a very swift 30-point play. Break down below 59.44 with a quick shot into 59.11 cog line. Below 5,900, it gets shallow again. We're likely to move another quick 50 from 59 to 58.50 swiftly. See, it gets really shallow back here. It is interesting to note that we turned around even in that shallow area, and we managed to get back up there last week. So be careful around that 58.70 if we do happen to get that low. There's no reason to expect that we're going to get that low, right? We're talking 100 points lower than where we are right now. For what? We don't have anything on the table that would put us down there at this point. Ten-day, 30-minute volume profile with TPO. They're lined up now. TPO point of control and the volume profile point of control. We're still eliminating the volume across the low end here, and we don't have anything that can challenge the current location's point of control. At this point, it does look like 59.25 would be our new point of control. It's not much of a shift from 59.11 cog line up to here, but it's basically jumping from one cog line to another, from 59.11 to 59.32-ish. We got to get out of this zone, and the lower edge of the zone has structure. So, if you think about that, if that is our range, and we've got a lot of volume here, right, that high volume node that we're moving around in this structure, the bottom end has a lot of strength to it. It doesn't mean that we can't break out of it, that we can't fall below 59, but the lower end is stronger than the upper end. We're more likely to break through the weak areas than we are the strong areas. So we can go down, right? Price can do whatever it wants, but path of least resistance is to the upside, getting through 6,000. Now, this isn't looking at options levels, call wall, that sort of stuff. It's looking at old things that are already done, like volume, right? It's beyond us, it's past us. You want to put the two pieces of information together. Trades that are on the table, call wall, and trades that have already happened, volume profile, so that you got a pretty good picture. And when we do put those two pieces together, we're boxed in pretty tight. And the longer we stay here in this range sideways, the more we're going to tighten that box up. The really neat thing about trading or price action is that it is a lot like nature in its movement and construction. In nature, things don't like to be bottled up. That's why you get explosions. You have to have a release valve. Same thing with price. Contain it in a very tight range and bottle it up, it'll explode. That doesn't give us a direction. Just the idea that if we start forming a squeeze, then look for the squeeze to end. The VPOC that we got yesterday, 59.71, we hit that yesterday, so we're done with it. Yeah, I bet it is. That's a good analogy. Like a 4-year-old stuck in the house, bottled up energy. So we're done with this one. We don't have a new one for today because we've already hit that level, so we just take it off the table. We're done with it. This morning's TPO and volume profiles point of control match, so no insight there. It is kind of the classic B-shaped profile, except for these high volume nodes that just stand out there in the middle of nowhere. It'd be interesting to dig deeper into that, on your own time, on your own dime. But you can see how much structure we got here in just this very small amount of time. And then again across the top. We didn't spend a significant amount of time in either one of those two positions. But we did get a fairly large amount of volume put in there. It's not much of a surprise, but we haven't done anything this week, right? If we look at where we closed on Friday, that's the gray line. Monday kind of straddles that in both directions. And then here we are stuck inside of Monday's range this morning. So we haven't done much of anything. We're still 4.25% above the 10-week. We are on the fade back. We just want to see that continue. We weren't in the extremes, but we were hitting the edges of it. So it's good to see this backing off a little bit. Looking at the 10-day, we're still 1.75% above the 10-day, but the fade continues back from the aggressive, overblown position that we were in. So we're getting back down into a level of normalcy. That is going to mess with the blue line, the average that is tucked in there, but it won't be the first time. These sort of moves above the 10, below the 10, these extremes are bear market behaviors. Right now, we're not in a bear market. One of the qualifications for that is how far away from the high we are. Typically, they call it a correction if you're 10% from the highs, and they call it a bear market if you're 20% from the highs. But once you come out of that, right, and you're more than halfway back from the lows, it's really hard to define it as a bear market at that point. But we are in a market that still has a lot of issues. And we can see those issues in that volatility in the extremes of how far away from the 10 we get. And it's likely not done yet. This is just the latest fade back, just like the extreme we had on the other side. So 1.8 is good. It's not extreme. It doesn't owe us any sort of mean reversion at this point. If it was gonna, it woulda when we were back, at 3.5% above the 10. Now that we're only at 1.8, there's really no influence or expectation that the 10 is gonna make us do anything. We have a really nice correction in time as an example of what that looks like. We just had it. Airlines were moving around pretty good yesterday. Might be worth looking at them again this morning just for some follow through. And I did mention the quantum as a service. There was earnings last week, which is still offering it some push, and then a new product. They call it a new energy efficient computing system from QBTS. But both of those, QBTS and QUBT, moving around in the pre-market. When it comes to the Mag 7, or at least the NY Fang group, got AVGO, Microsoft, and Amazon. That's 3 of them right there to the downside. So when we have a mixed bag, some of the Mag 7 up, some of them down, then we got to, kind of dig into what sector or what industry. When we look at things that are down this morning, we don't have anything on the list down more than 0.5%. So we look at things that are up this morning, at least 0.5%. And we have uranium and nat gas. You don't want to rally on uranium and nat gas. So we got nothing. That's the long and the short of it right there. We don't have anything at this point. Pot stocks. Yay. So silver is almost there, but gold isn't. It's a little odd that we have one precious metal but not the other. See what comes out of that. Usually it's one's gonna play catch up. So either gold gets its butt into gear and catches up with silver, or silver gives up the gains and drops back down with gold. Airlines kind of flat. So whatever we were getting yesterday, it didn't follow through, at least not yet. China is up, but I don't see the constituents with it yet. We really didn't dig into it too much other than Billy. One of the China names was up, but Billy's not going to bring FXI up that much on its own. Maybe the other players, Baba, Baidu, JD, PDD, all those guys. So Baba's a little bump. Baidu, more of nothing. Yeah, JD, really nice little push there. Not much out of PDD. So a few, it's kind of a mixed bag. The KWeb constituents, those China ADRs, you can see it's a really wide range, and we've got nothing. The only really positive thing that we could say at this point is we're above the year-to-date anchored VWAP, which doesn't, really give us that much, but at least we have that. A continued drive to the upside, we stall out again at 38. We're not at the highs, we're not at the lows, and we're not even resting on the midpoint at the half. So a really horrible place to try to get in and go long, right? If we could retest the half at least, then you'd have something to lean on. But we don't even have that yet. So really nothing on the upside. Take a look at the downside. Banks. It's odd we got pot stocks on this side too. So a little discrepancy on the pot stock space. Energy, whether it's crude or tan, they're both down. Crack is almost there. Pot stocks again. So really we got nothing. The chips are down a little bit, not enough. The Mag 7 is up a little bit, but not enough. So a lot of discrepancy this morning. No reason for us to break out and make a move unless something changes. We need a significantly negative market environment to break through that put wall, or we need a really positive market environment to break yesterday's high and drive up into that call wall. So far, we have neither one. So keep your eye on the headlines. We have a lot of Fed speakers today. Any one of them can be taken out of context. They can be misquoted, misunderstood. They can accidentally say something they didn't mean to say, quote, accident. And we've got European Fed speakers too. Bank of England, European Central Bank, and then we've got the president twice and a White House press briefing. So there's a lot of opportunities for a headline to move this market. Be careful of those shock and awe headlines, right? That cause a really big candle, a fast push in one direction or another, and then we just stabilize right back to where we were. Keep your eye on the prize. We have to get out of this range. To really go back that far? Yep. 5,900 and 6,000. Get out of the range. We got something to do. That's what I got for you guys. Be careful. Be safe. I'll see y'all tomorrow.